Welcome to my channel. I'm Scott, and in this video we're going to go through Apple's financials. If you want to look at financials for a company, you could go to websites like Yahoo Finance. I like to get the financials directly from the company. You can do that by looking at the 10Q or 10K. The 10Q comes out quarterly, the 10K comes out annually. Since Apple's accounting year is at the end of September, their most recent report is a 10K. If you look on the table of contents, you can see all the information the 10K provides. You can learn so much about any company, more information than you even thought of by going through the 10K. So we're going to focus on item 8, financial statements and supplementary data. So I could either click on item 8 or I could click on the financial statements link. It'll bring me to the financials. This is the first page of item 8. So we could go directly to the statement of operations, which is the P&L. Alternatively, we could jump to the balance sheet, statement of shareholders' equity, the statement of cash flows. Let's start with the income statement. We could just scroll down one page. And this is Apple's income statement. They call it the consolidated statement of operations. Some companies call it different names, but I know it's the income statement because it starts with revenue, then there's cost of revenue and net income. These are all items on the income statement. Apple provides the 12 months ending September 2020, September 2021, and September 2022. And you can see their revenue increases each year from 275 billion, because all the numbers are in millions, 366 billion, that's a big jump, to 394 billion. Obviously they did better from 2020 to 2021, but they did increase from 2021 to 2022. If you want to know their percentage increase, which gives you a little more information than the nominal increase, just bring this into Excel. So 274 billion, and let's bring the 366 billion and the 394 billion. So they had a 33% increase from 2020 to 2021, and 8% increase from 2021 to 2022. As you probably noticed, Apple condenses their numbers. They don't give you too much detail. So they just break down revenue into products and services. And you could see a bulk of their revenue is from products. 316 billion. 316 billion of the 394 billion. So 80% of their revenue is from products. I know their most popular product is the iPhone, but they also sell computers and accessories. You may be wondering what the $78 billion of services represents. So I'm not really too sure, but one way to figure out is to just search this dollar amount. So we can search the 78 billion inside this document. And here's a breakdown of their sales. So bulk of their sales is iPhone, 205 billion, then the Mac, 40 billion, iPad, 29 billion, wearables, home and accessories, 41 billion, and then services. It doesn't really break down services, but there's a footnote 3. It says services net sales include sales from the company's advertising, Apple Care, cloud, digital content, payment, and other services. And they also say services include amortization. If you're ever not sure what a term means, just Google it. You get a lot of information from Google. Maybe the first few times you Google and search something, you might not understand it 100%, but after doing it 10 or 20 times, you start to really understand it. If you're still not 100% sure what services represents, you can see if this dollar amount appears again in the 10K, or you can search the term services. But by looking at this, I understand what advertising is because they have a pretty big user base. So they sell ad space on their different platforms because there's lots of companies willing to pay Apple to get their product in front of Apple users. And if you're not too sure what Apple Care is, you can just search that term in this 10K or just go to Google, say what is Apple Care. Cloud computing is a really big service that's growing. Microsoft and Amazon generate lots of revenue from cloud sales. But let's go back to the income statement. Underneath revenue, you'll see the cost of revenue. So if they just sold products like the iPhone, they would use the term cost of goods sold. Since some of their expenses come from services, they use the term cost of sales, but it pretty much means the same thing. In order to generate $316 billion of revenue, they spent $201 billion. So the cost of sales includes labor. It also includes maybe the plastic they bought in order to make the iPhones or iPhone cases. This also includes the cost of the batteries they put into their computers. All the expenses in order to make the product. If you want to understand their margins on products, you could take this $201 billion. So their revenue from products is $316 billion. The expenses to make those products is $201 billion. Let's calculate the difference. $114 billion. $114 billion over $316 billion. So they had a 36% profit or 36% margin on the sale of products. Let's look at their services, $78 billion. And the expenses is $22 billion. Let's just copy this over. So you can see they're much more profitable in services. They had a 72% profit. Only 28% of their revenue went towards expenses. That makes sense. Services are much more profitable because you don't have to build anything. You don't have to pay for factories and materials. Then they show their gross margin, which is revenue minus cost of revenue. You also want to look at this as a percent of revenue. Usually you look at most numbers on the income statement as a percent of revenue. Then under gross margin is their operating expenses. These are the expenses to run their day-to-day business. And they just show us R&D and SG&A. And I do understand on a high level what these two terms are, but I couldn't tell you exactly what this $26 billion represents. I know a good part of it is payroll, but you probably don't need all the detail. As long as you could understand things on a high level, you can make a lot of good decisions. But if you do want to get more detail, you can just either search this number or search research and development in the 10K and you might get more info on what these mean. Their total operating expenses are $51 billion. So their gross profit minus operating expenses gives you your operating income. You can see that grew a lot, almost doubling, a little less than doubling from 2020 to 2022. And then you have other income and expenses. This is all the gains or losses not part of the company's core operations. And you can see they had a gain of $800 million in 2020, which is a big number, but when you compare it to their operating income of $66 billion, it's more of a rounding error. So this line item is pretty insignificant for this company. But you might be wondering, what is other income and expenses? Let me give you a simple example. Say I own sandwich shops. I own 8 of them. It was a pretty simple concept. I would have a few people at each store making the sandwiches, and people would come in during their lunch or whenever they wanted, and they would buy a sandwich. So my expenses would be the meats, the breads, the condiments, the payroll, the rent, and all those items would appear above operating income. And currently I have 8 locations, and when I want another location, I just lease the storefront. But my very first location, I bought the real estate. So 20 years ago, I paid $100,000 for the property. And now I want to sell that property for $1 million. So that's a $900,000 gain. That gain would appear in other income and expenses. Because my business is not to buy and sell real estate. My business is to make sandwiches. So the profit or loss from the sale of that property would appear in other income and expenses. If my main business was to buy and sell real estate, if I was a REIT, then the dollar amount would not appear in other income and expenses. Then below that is income before taxes, which is operating income plus or minus other income and expenses. And then of course taxes. So my net income is my income before taxes minus my taxes. So in 2022 it was $100 billion, in 2021 it was $95 billion, in 2020 it was $57 billion. And you should look at these numbers as a percent of revenue and also look at their percent increase or decrease over the years. Another good way to understand how well a company is doing is look at earnings per share. So in 2020 they had $57 billion of earnings and 17.4 million shares outstanding. So 57 billion over 17.4 million is 331. So each shareholder earned $3.31 for 2020. And that jumped up to 567, then up to 615. So you can see Apple's earnings go up each year and their shares outstanding decline because Apple is a really healthy and profitable company. Most companies don't look as good as Apple. This is the biggest company in the world. In 2022, they had 16.2 million shares outstanding and 16.3 million dilutable shares outstanding, because some people may own debt that can convert to equity, or they may hold warrants or different types of options that can convert to equity. So if everybody converted their securities to equity, then your earnings per share would decrease from $6.15 to $6.11. But if it was a really big difference like $6.15 or $3, that would be concerning. The two most popular financial statements are the income statement and balance sheet. The balance sheet is like the net worth for a company. So if you wanted to make your personal balance sheet, you would put together all your assets. So what's the value of your home if you sold it today in the open market? Don't worry about how much money you owe, just what's the value. What's the value of your car? How much cash do you have in the bank? You also list your investments, how much stock you own, the bonds you own. Now you would look at your liabilities. How much do you owe on your house? How much do you owe on your car? Any credit card debt? So your net worth will be your assets minus your liabilities, your equity, which is the same thing as the balance sheet. The balance sheet lists the assets, what the company owns, the liabilities, what the company owes, and what the company's worth, their equity. So the assets are broken down by current assets and non-current assets. Current assets are assets that can be converted to cash within 12 months. When you look at a US balance sheet, it lists the most liquid to the least liquid. I know some other countries have the opposite. It's the least liquid to the most liquid. So cash is the most liquid. The definition of liquid is cash. They have $23.6 billion in cash in 2022. Last year, at the end of September, they had $35 billion. Marketable securities, if they own any stock or bonds, that's marketable securities. That's also really liquid. If the market is open, you can sell most stock within seconds. You can easily convert it to cash. Then you have accounts receivables. This is how much money other companies owe them. So if they sold products on credit, that's $28 billion. Inventory, $5 billion. So this might include the plastic they purchased to make their iPhone cases. It may also include the batteries they purchased to put into computers. Then they have vendor non-trade receivables, $33 billion. So you can either Google this term or search it in this 10K if you're not too sure what the difference is between accounts receivables and vendor non-trade receivables. Then you have other current assets, $21 billion. These are assets that don't fit into these buckets. You can of course search this term if you're curious what this $21 billion represents. So total current assets is $135 billion. So these are the assets they can convert to cash within 12 months. Non-current assets are assets a company cannot convert to cash within 12 months. You see, they also have marketable securities. So $121 billion of the securities cannot be converted to cash within 12 months. If you're curious what this represents, we can just search this dollar amount. We can see a bulk of the $120 billion is $70 billion of corporate debt. They also have US Treasury securities, non-US government securities. If we continue searching this dollar amount, 120,805, we can see $87 billion is due after 1 year, but before 5 years. $16 billion is due from 5 to 10 years, and $17 billion is due after 10 years. So if they bought 20-year debt, it would show up in after 10 years. But if they bought 20-year debt 18 years ago, that dollar amount would show up in the 1 to 5 years. Then they have $42 billion of PP&E, property, plant, and equipment. So all the manufacturing facilities they own fall into this bucket. Also the value of their machinery, because those are assets that the company can sell. So it could take a while to sell a $20 million factory, a lot longer than it would to sell stock in a company. Then you have other non-current assets. Total non-current assets is $217 billion. So their total assets are $350 billion. So we know their liabilities plus equity has to equal $352 billion, because assets have to always equal liabilities plus equity. Now if we look at the liability section, it's broken down to current liabilities and non-current liabilities. Current liabilities are liabilities due within 12 months. Accounts payables is what they owe their suppliers. So when they buy product on credit, that goes into accounts payable. So they owe $64 billion. Other current liabilities, $60 billion. Deferred revenue is when a company receives payment for a product or service before it's delivered. This could be Apple gift cards. So anytime someone buys an Apple gift card, that goes in deferred revenue because they didn't actually provide any product or service, they just sold that gift card. Once the person uses the gift card and buys something, then Apple takes that dollar amount off of deferred revenue and books it onto the income statement as revenue. Lots of big companies use commercial paper to fund expenses like payroll. This is short-term debt, usually between 1 and 9 months. And they have $10 billion of commercial paper, $11 billion of term debt, and you could see they have $99 billion of term debt and non-current liabilities. So this debt is due within 12 months. This debt is due after 12 months. So if you want to get a little more information on this, you can just search this dollar amount. So the first thing that comes up is a table showing the maturities between 2022 and 2061, $106 billion, and the interest they pay is 3 basis points up to 4.78%. But this is pretty high level. If you scroll down a page, you get a little more info. So if we summed up the term debt on the current liabilities and non-current liabilities, it probably equals $111.8 billion. $11 billion of that debt is due next year in 2023. $10 billion is due in 2024, but a bulk of it is due after 2027, $59 billion. They have $154 billion of total current liabilities. This is money they owe within 12 months, which is more than their current assets. So that means their current ratio is below 1. Current ratio is current assets over current liabilities. Ideally, you'd want to see the current ratio above 1, like it was in 2021 where their current assets were greater than their current liabilities. Now you have non-current liabilities. This is how much money they owe beyond 12 months. So most of it is term debt, $99 billion, and then other $49 billion. So total liabilities of $302 billion. Then you have equity, $57 billion in common stock and additional paid-in capital. That grew to $65 billion. But look at their retained earnings. It's negative. They have an accumulated deficit of $3 billion. Last year was $5.6 billion. Retained earnings is the sum of all the company's prior net incomes minus the sum of all the dividends they paid out. But we know they're a profitable company. How come they have negative retained earnings? Well, the best way to understand this number is to go down to the next sheet. This is the statements of shareholders' equity, and this shows us how their equity moves. You can see their equity went from $5.6 billion to negative $3 billion. Even though they were really profitable, their net income was $57 billion, $95 billion, and $99 billion. The reason they have negative equity is because they buy back so much stock. They bought back $90 billion of stock in 2022, $86 billion, and $73 billion. If they didn't buy back all their stock, they'd have $87 billion of retained earnings. So if they really needed money, Apple, they could just reissue this stock. Or if they were short on cash, they could just not buy back stock. They do pay a dividend 90 cents a share. It went up from 85 cents. But it looks like a bulk of their excess money is buying back stock. But you may be wondering, they only had profits of $57 billion in 2020, yet they bought back $73 billion of stock. Why would they buy back more stock than their profits? You have to remember net income is their accounting profit or loss. It's not how much cash they generated. If you want to know how much cash they generated, you have to look at a statement of cash flows. And the first section of the statement of cash flows is cash flow from operations. This takes your net income of $57 billion and converts it to cash. So they actually generated $81 billion of cash from their operational business. So that's why they bought back $73 billion of stock, because they did have enough cash to buy that back. The operating cash flow section breaks down the difference between this $57 billion and $81 billion. A lot of it was depreciation and amortization. These are non-cash expenses that bring down your net income, but we add it back here. Then they had $7 billion of stock-based compensation, $7 billion of accounts receivables. So when you buy on credit, that's a cash inflow in that accounting period. In 2021, it looks like they paid back that accounts receivables, so that's a cash outflow in that accounting period. Most healthy, profitable companies will have more in operating cash flow than net income. If a company has less in operating cash flow than net income, you want to understand why. That could be a red flag. Then you have investing cash flow. This is when they buy marketable securities. Also part of investing cash flow is when a company acquires another company or buys property, plant, and equipment. They spend $11 billion in PP&E. So in their investing section, they had a cash outflow of $22 billion, but most of that is marketable securities. In their financing section, we can see how much dividends they paid, $15 billion, how much stock they bought, $89 billion. It also shows us the inflows and outflows of debt and equity purchases. So in their financing section, they had a cash outflow of $110 billion. Most of it is from buying back their own stock. So this was a really high-level overview on Apple's financials. I hope you learned something new in this video. Please subscribe, leave a like, comment. Thanks for watching.